So why don't you tell us in your own words what's driving the growth at Coke right now and the better outlook?
Yeah, we had a great quarter. Actually, I think that the big story is that this is another quarter of growth on an improving trend of momentum. We're now getting multiple years of good growth rates. Really, the numbers are probably more like a 5, but multi-year growth. And I think it's a sign that the transformation of our business to being more consumer-centric, more innovation and marketing-led, and being faster and more nimble with our bottling partners on executing is really bringing together increased momentum across the global business system. I think it's very heartening for everyone that works in the Coke system.
I mean, we see it in the share price reaction, up 5%, as Carl mentioned. The numbers were a lot better than expected, and the stock has underperformed. The market this year, Pepsi this year. What did the street have wrong?
I think in a way at the beginning of the year, we came out with some guidance. You were just talking about the macro environment. We saw some clouds on the horizon too, but the storm never arrived. So by sticking to our plan, by executing against our strategy, we've been able to deliver stronger momentum than even we were expecting, and that's why it's allowed us to raise our guidance for the full year, expecting a 5% organic revenue growth in the full year. Clouds are still there, but the storm doesn't arrive, and so we're going to stick to our strategy, focus on executing, and really drive for a better underlying operational result for the year.
And talk about what you saw in different markets in terms of the balance between pricing and actual unit growth or volume growth, and what that says about underlying demand.
Well, I think what's really, really encouraging for everyone is the fact we're getting a good mix of volume and price. I mean, this quarter was a 3% unit volume growth. The average of the last 4 quarters has been 2. Average of the last 4 quarters of pricing has been 3. So really, we're getting into the sweet spot of balance of volume and price, which is really symbolic of the fact there's a tremendous opportunity ahead in the beverage industry. Ultimately, commercial beverages have a tremendous growth runway, particularly in the emerging markets, where 80% of the world's population lives, and only a quarter of what they drink is a commercial beverage of any sort. So there's a massive runway ahead of us, and I think our ability to find a sweet spot of volume growth with price, driven by the marketing, the innovation, and the execution, really sets us up for sustained long-term momentum.
What about in North America specifically, where pricing is obviously a bigger growth driver than volume growth? Is that just we're going to get used to smaller packages and that's going to be the norm, or can you do anything to lift those volumes?
Well, we're really focused in the U.S. on driving our business through transactions. And so we have been bringing down some of the package sizes. That's part of our overall effort to grow our business and to reduce our calorie footprint. So really in the U.S., we're looking to see the balance of the revenue growth driven by a little bit more price and package mix and brand mix than volume. Of course, we'd love to see a little bit of positive volume, but we think that sticking to our strategy is going to help us re-engage very constructively with consumers well into the future. And so we're seeing household penetration of our brands growing, interaction with the brands growing, and importantly, we're seeing growth both in the sparkling beverages and in some of our premium stills beverages. So setting ourselves up for many good quarters to come.
Okay, let's go through the portfolio. Coke Zero Sugar, got to start there. Another quarter double-digit growth. Is this the new diet? Are these Diet Coke drinkers transferring over to Coke Zero Sugar? Is it attracting a new crowd? What is it about this product?
It's really 3 things. It's some Diet Coke consumers coming over, but generally that's not the biggest source because people are super loyal to Diet Coke. Some of the people are going from Coke as they want to balance things out. They maybe have a Coke Classic and a Coke Zero Sugar, so coming from Coke, and then coming in from other categories. Coming in from sparkling water categories, coming in from other sparkling categories. So the sources of growth for Coke Zero are broad-based, which also gives us a lot of confidence that we have a lot of runway ahead for this brand.